What's up, everyone? All right, so in this episode, we're going to go over the anatomy of a trade, and the stock we're going to look at is WETG. WETG today made a 160% move. It is a recent reverse split, and it had AI news. So the combination of recent reverse split and AI news was enough to send this thing up 160%. I finished the morning up over $18,000 just this morning trading WETG. So this is a stock that's definitely worth looking at in a little bit more detail. So what we're going to do is I'm going to start from the very beginning and kind of walk you through when I saw the stock, what I initially kind of my gut reaction the second I saw it. And what I want to try to do is slow down all of that to help you better understand why I took the trade. Because what can happen when I'm live trading, and some of you guys who were watching while I was live trading, it can happen so quickly. All of a sudden, out of nowhere, a stock starts squeezing up and it's like boom, 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 boom. Next thing you know, I'm up $5,000, $10,000, $15,000. And it's like, whoa, where did that come from? How did you know? There's so many questions. So what we're gonna do in this episode is we're gonna really dissect this trade. We're gonna go over the anatomy of the trade. We're gonna slow it down. We're gonna go back to the very beginning when the news came out. All right, so let's go to screen share. Let's take a look at this. So this morning at 8:30 and 7 seconds, WETG hits my scanner at $9.89. Now, when it first hit the scanner, the very first thing that I saw, number one, the scanner that it hit is the up 10% in less than 10 minutes, which is a scan that tells me a stock is moving quickly. So I have an audio alert turned on for this scanner. In fact, it's kind of funny. My dog, when he hears that scanner, he like lifts his ears up because he knows if I'm not in front of my computer, I'm going to be running to my computer and he better move out of the way because I'm going to be moving quick. So I hear the scanner, I'm already sitting here. So I pull up WETG, I pull up the ticker, and I already know the stock. So how do I already know the stock? Well, we have such a large trading community that people are mentioning stocks all the time. And this is a stock that a bunch of traders were talking about towards the end of last week because it was conducting a reverse split. So for those that don't know about reverse splits, this is something I talk about extensively in our classes. I have a whole setup that's dedicated to trading the reverse split. So you could go under products and check out the Warrior Pro. You could check out my trading classes and you could see the curriculum there. But basically, reverse splits are a very common occurrence with small cap companies. So these lower price companies, they struggle often to keep their stock price over $1 a share. And that's a problem because there's a minimum listing requirement to keep your stock above $1. So NASDAQ, NYSE, the American Exchange, they will delist a stock and tell them to go to the OTC market if they can't keep their price above $1. So short of being a better company that's more profitable, the only thing they can do is a reverse split. And so companies do this all the time. They'll IPO, let's say at $10 a share, they'll IPO 10 million shares. And then what ends up happening, and I'll just do the whiteboard here just so you can see the math a little bit better. So we get IPO $10 and it's 10 million shares. So this would be a $100 million that this company has raised through this IPO. All right, so the stock ends up declining in price. It goes all the way down to, let's just say for easy math, it goes down to 20 cents a share. All right, that's a problem. It's below $1 cutoff. So what the company decides to do is a reverse split. So let's say in this case, they say, well, let's do a 10-to-1 reverse split. So we currently have a 10 million share float and we're priced at 20 cents. The next day, the stock resumes after the 10-to-1 split and it's at $2 a share, and the float is 1 million shares. So the market cap doesn't change with a reverse split, but what does change is the price and the float. So in the case of WETG, they did a 185-to-1 reverse split, and they just did it on Friday. So you can see here, this was a huge reverse split, 185-to-1. But that's what they needed to do to get their stock back up, not just over $1, but well over $1. All right, so they do the reverse split. Now, that has an effect on the float. So you see the float here is listed at 62 million shares. Well, if you go into the filings and you check the filings, you actually will see here. So this was a little bit older. This was as of November 2022. They had 195 million share float. So you go through the filings and you get into a little bit more detail. But what you'll realize is that as a result of this reverse split, the adjusted float is now actually like I think it's even less than 1 million shares. So now there's a very small float. Okay. So I was already familiar with the stock ticker WETG because they had just done a reverse split and people were mentioning it. But that didn't give me any reason to trade it on Friday or Monday or Tuesday because there wasn't any setup on it. And then at 8:30 today, what happens? News. So we have our news desk here that drops the headline, and I can pull it up right here. So the news is WeTrade Group launched large-scale language processing models to increase production applications in the field of artificial intelligence. Keyword, buzzword. That's a hot word right now, right? So all of a sudden, what happens? The stock starts to squeeze up. So it goes basically almost immediately from $9, $8-9 up to 12. Now I saw it right in here, and you know what I honestly thought? I was like, volume is a little light. It was only like, I don't know, 25,000 shares of volume. I was like, I don't know, volume's a little light and the spreads are a little big. That combination of light volume with bigger spreads, that can be a recipe for disaster. That doesn't always play out well for me. So I didn't take a trade. I was just like, oh, let's just watch. Let's see what happens. Because look, if it's really strong, we'll have more opportunities, right? No reason to chase it. Patience. Now, for those of you that don't know, I just got back. Today's my first day back in my office. I've been trading in my traveling trading station for the last 10 days. I flew to Colorado with my 5-year-old son, and we picked up a Sprinter camper van, and we drove it all the way back. If you've ever done a road trip with a 5-year-old, a 20-plus hour road trip, you know how important patience can be. So I pride myself in being a patient person most of the time. And I am pretty good with my patience when it comes to trading. So yesterday, for instance, I was trading in Lancaster County, Pennsylvania, with my Starlink, it was all set up. And I didn't see anything that looked good, so I didn't end up taking any trades. And I was like, that's okay. Some days there's just nothing there. Patience. Today, all of a sudden I see something that looks good. I'm willing to strike. I'm ready to step up to the plate. Patience is super important. So I said, all right, I see it squeezing up, but I don't have FOMO right now. The volume is a little light. The spreads are kind of big. Let's just see what it can do. Okay, so it ends up going a little higher, up to 12. And I was like, shoot, that was nice. Okay, so I ended up missing a trade, which I considered, but talked myself out of, from 11 to 12 right there. That was called a micro pullback. So I didn't take that first trade. But then it pulls back a little bit more, and watch right here. Okay, so it's going to pull back just a little bit more, and then it's going to curl back up. And right here, it breaks through 12. That's where I broke the ice with my first trade. Now, Lightspeed's not really great with their charts, which is why I don't use them for charts. We have our own charts here. These are the Warrior charts. These are available for students who are using this platform at Warrior Trading. But in any case, my first trade was right here, just before it broke through 12. So that was my first trade, took profit, got back in, got out. You can see I just trade the whole move up. I never know how high a stock is gonna go. Some people would say, Ross, I can't believe you sold, right here for $900 of profit. You should have held that whole position for, 10 points. Coulda, woulda, shoulda. You never know how high something is gonna go. And I'll tell you guys, my perspective on trading is a little bit different than some people. I trade from a perspective of I'm trying to make money every single day. Mentally, I'm trying to make money to pay bills because that's how I learned how to trade. That's what it was like for me when I was getting started. I wanted to make $100, $200 a day to pay some bills. So as soon as I was up 100, 200, I take it off the table. And then look, if another setup forms, I'll get back in. So even though today I've been incredibly fortunate to make over $10 million trading and I could just let it roll, I still have that mentality that I need to take the profit off the table. And this is something I talk about a lot with the, financial independence, retire early sort of philosophy and how you can apply that to trading. because really to me, trading like 1 or 2 hours a day kind of is retirement. So if you can get your $100 or $200 a day, and then you can go enjoy the rest of the day, that's pretty much retired. And that's like making $50,000 to $100,000 a year in retirement. Like, that's phenomenal. Most of the people who do the FIRE movement of financial independence, retire early, they try to save up like $1 million so they can pull out 4% a year, right? That's $40,000 a year. So now they've got like $3,000 a month that they can use to pay their bills. Well, geez, if I have a $30,000 trading account and I can make $200 a day trading in 1 to 2 hours, that's the equivalent of having $1 million and drawing 4% out. So like, I kind of look at it as being a similar way of achieving the same. Anyway, so that's just to give you some insight there for those that aren't familiar. So anyways, my first trade is at this arrow right here for the break at 12. And I jumped into that trade. So let me just go back. So I bought 4,000 shares there. I bought 2,000 at 11.71, and I added another 2,000 at 11.97. And as it broke through 12, I took 3,000 off the table at $12.13. So this is for me, like just a standard kind of base hit, get in, get green, start to build a cushion. And then once I've got a cushion built up, let's see what it can do. All right, so this is a 1 minute micro pullback. Sorry, this is on a 10-second chart right here. So it's a 10-second micro pullback right there under 12. So I got in right down here and then took profit through this level. And the thing spikes all the way up to 13. I was like, whoa, wow, okay. This is showing that it has a willingness and an ability to move. Now, for those that aren't familiar, there's a couple different criteria that I look at to consider taking a trade. The reverse split isn't a criteria for trading. It's nice to have it, but I look for a couple things. Number one, I look for a stock to be up at least 10%. Now, there's no question that this checked the box. I look for a stock to have relative volume 5 times or higher. So now let's just double check this. When the stock first popped up, it might not have quite met that criteria. No, it did. It did actually, even though the total volume was light, as you can see. So the total volume was light, but it was, so the relative volume was 2.28 when it first hit. So already the relative volume was pretty high. And by the time I would have taken that first trade at 12, the relative volume was 6. Okay. So in fact, check, we got the relative volume. So I want to see it's up 10%. I want to see relative volume is 5 times or higher. I would typically like to see news, right? And this one had the news. And to make it better, it had a buzzword, which in this case was AI stock. So that's terrific. That's what we like to see. Then we like to see, I prefer price between 2 and 20. Check. And then I like to see float of under 10 million. I mean, I don't mind trading a little higher, but 20 million, under 20 million is fine. But in any case, this one was 1 million, so check. So we had 1 million, we had price of $12 to start. It did get a little more expensive towards the end. We had the AI news, we had the relative volume, which started at 6 and went up from there, and we were already up 35% or almost 40% when I took my first trade. Okay, so these are my sort of 5 criteria for considering a trade. These are my minimums, and this is how Wet G stacked up against that. All right, so it meets them fairly well, very, very well, I would say. All right, so we first get this move here, and I'm going to stay on the 10-second chart just because even though this is a short time frame, it's a very fast time frame, it's helpful for you guys so you can visualize micro pullbacks. All right, so let's see. All right, so that was my first trade. Then it goes back, it goes up here, and it pulls back, and I take another trade. I bought the dip. It pulls back to this sort of blue line here that I drew between this candle and that candle. All right, so I got back in at 12.34. This was a 2,000 share dip trade, and I added 2,000 shares at 12.59, and I was anticipating the break through 13. We ended up hitting a high on this candle of just under 13, and then we broke through 13. So just like that, nice trade, not bad. I added at $12.96. I took profit at $13.21. We hit a high here of $13.30. Not bad at all. What's the next trade? What would you guess? The next trade, again, as it pulls back to this blue ascending support line, I'm adding back another 2,000, this time I did 1,500 shares, a little smaller size, reducing risk a little bit. But I added another 1,500, so I got up to 3,000 shares instead of where I would have been at 4,000. I felt like it was getting a little extended. I wanted to manage my risk. So it goes a little higher here, up to 13.45. Hits a little resistance at the $0.50, it drops down. And at this point, I kind of thought, all right, maybe this is done. It dips down here, and I did start looking for dips. So this was at 858. So let's see, I got a dip trade at 1307, which was a nice dip trade right down here, about with a 10-cent stop, 12.97, and it ends up giving us a nice move here, surprisingly good. But I started with 1,500 shares at 1307. I added another 1,500 at $13.14. I had another 1,500 at 13.49. So 4,500 shares, and now I'm taking profit as it goes up through 14. Again, like, you can't really complain about that. That's a really nice trade. Now, at this point, the blue ascending support line, I didn't know how valid it was. We broke below it. We came back above it. Yeah, there we go. So I had that line drawn, and it did seem like we were kind of up against it here. So as we continued into pre-market, we get 9 a.m. So by 9 a.m., right at 9 a.m., I'm up $7,500. So I've already had, just in this range here, $7,500 of profit. That's not bad. All right, so it's holding up well. It dips down, and then look at this move right here. A bounce off 14 right there. So let's see, my next trade was, let me look. So my next trade, I took a trade at 9:02, I got in 1,500 shares at 14.43. That was at 9:02. That gave us the move up towards 15, added at 15:04. So a starter, 14.50 approximately, adding at 15, averages 14.75. On that candle, it ends up squeezing up through 15.80. That's great. Then it pulls back, and I add again right here through 15.70, 15.60, and it curls up again. Bought this dip. Now it feels like this blue ascending support line is kind of back in play. We get a really nice dip off it here and a move up to 17. Then a little bit of a bigger pullback to 15.80. So this was around 9:10 in the morning. So around 9:10, we sort of, I did a dip trade here where I bought 1,000 shares at 15.94. I sold it at 16.11, and I was like, I don't know. It double bottoms here. I didn't take that double bottom trade. It comes down to triple bottom. I tried and did not get filled on this triple bottom. And then right here, I said, okay, you know what? The 1650 level, I'm concerned that we're going to see a rejection off that level. Why? Because right now we're zoomed in on the 10-second chart, but we've got to pull back and look at the 5-minute chart for a second. So the 5-minute chart was showing us at that time that we were really extended. All right, so we were extended. We were well off of our moving averages. So I was like, I don't know. I'm a little concerned about a rejection here. All right, so watch what happens. So it starts to pop up, and it flushes down. All right, so it comes up to right here, and it flushes down. It hits a low down there, and let's see, so this was at 9:17, so let me just zoom forward. So I ended up buying at 16.84 as it curls back up here, and I was looking to ride the momentum through high of day. I bought 1,000 shares, 1,000. Not a big position, but I was like, let's see what this thing wants to do. Added another 1,000 shares at 16.90. It breaks through 17 and goes to 17.50, and just like that, that's 50 cents a share. I added at 17.58 and 17.66. Now I'm looking for the move up to 18. And look at how this pulls away right here. So this was the beginning of a really a parabolic move. it started to really open up. Now, the only problem for me, and although I did make $10,000 on this leg of the move, I felt that I had to reduce my risk a bit because the price was getting higher, the spreads were getting bigger, and I was concerned about having that final trade. You know, you buy high, sell higher, buy high, sell higher, and then you have that final trade that burns you. And if you keep adding more and more size, it can be bad. So on this trade right here, this was I suppose the most disappointing trade of the day in a way, because on this trade I added for the breakthrough 2050, and on this candle it spikes up over $1 a share. And I tried to take some profit, but I didn't get filled. I filled maybe, I don't know, 500 shares of the 4,000 plus that I was holding. I might have even had 5,000. So I had a nice position and I ended up stopping out flat right here. So then it drops down, it comes back up again, and look, it does it even more dramatically. So this time I got back in right here for the retest, and I was able to lock up some profit, but I was still holding 800 shares into that drop, and I lost $1,000 on that flush right there. And at this point I was kind of like, I don't know guys, this is starting to get a little risky. So my last trade on it was a dip trade on the resumption of the halt. I added at, let's see, it was 19 and 1875, and then I took profit at about 1915, and I was like, you know what, I think I'm good on this. So, you know, the thing is, this had this really nasty flush here, and it had this kind of rejection here, and it halted up at the open, but I didn't want to trade it because I was concerned about volatility at the open. And then we got the open higher and halt down. The bounce wasn't very big. It halts up again, then it halts down, right? So now it's just starting to get a little too choppy, and I just say, you know what? I think it's fair to say that we had on this one the front side of the move, which began early at 8:30, and which I traded from about 8:45 up until this level. But this whip in these two candles and then this halt down, that really marked the top. And that was everything here was the front of the move, and everything here so far has been the back of the move. So it's still holding up relatively well. It's up 76%. That's not bad. I'm sure there's people that have traded it much longer into the day than I did, and some may have made more and some may have given back profit. But one of the things that's important that I always think about is making sure I'm walking away sooner, quitting sooner, before you have a close call, before you potentially give back half your profit. Because on a trade like this, where you have halts down and gapping lower, or where you have those kind of whips that are like $2 or $3 a share, you know, with 4,000 or 5,000 shares, it wouldn't take much to lose 8,000 or 10,000. So I feel like I certainly could have made a lot more on this had I traded it a little bit differently, a little bit better. But at the same time, green is good. I'm grateful for the gains that I got. I always try to study these charts and ask myself how I can do better next time. So if I see almost the same pattern tomorrow, how can I trade it a little bit better? And if you're trying to always strive to be better, I think that you're doing the right thing. So this has been the anatomy of a trade on WETG, $18,538.09. Really solid action. Not totally perfect, a little issue with some spreads. I had some issues with some of my orders not filling, but all in all, we got some good action, got green. I certainly got green. I saw a number of people saying that they had done really well on it, which is great to see. And hopefully this is a helpful lesson for you that you can take and apply in your trading to help you trade the next one a little bit better. So thank you guys as always for tuning in. I'll remind you as always of my disclaimer that trading is risky. My results are not typical. There's no guarantee you'll find success. Whether you trade on your own, you'll learn from me. So take it slow. Practice in a simulator before you put real money on the line. And I'll see you for the next episode real soon.